I guess I wouldn't obsess too much about it. I would be worried if we had a exceptionally strong number, as I was mentioning, going into third quarter reporting. But I have to say, this data, even though September jobs were not as high as some might have predicted, or even my forecast, the upward revisions were exceptional. I mean, it's really confirming for us how strong this economy is, that the Fed should stay on track, that companies should feel really confident. I'm going to be watching really closely what happens, especially for consumer companies, their top line and revenue growth forecast, not just for fourth quarter, but in 2019, which I would expect to be very, very strong, given income growth and this high level of employment.
Austan, we talked before about how the market really wanted to see a Goldilocks number, warm but not too hot. Does this hit that metric?
Yeah, but only on a technicality. I mean, that's an abysmal number. If that were a normal month, we'd be looking at each other, whoa, wait, what does this mean? But because of the weather, I think it's a Goldilocks number because people are just going to say you can't tell anything.
Austan, if you add 80 to 130, you get right to Rick's number of 211. I think Rick nailed it. Rick, don't you think? It's 211. 130 plus 80.
I'll give him that. I think it's a strong month, and that's what he was saying.
Yeah.
It's so funny, Joe, because on the trading floor, one of the big traders behind me started to buy treasuries. Then he yelled, look at the revision, and he reversed his position. Truly, treasuries are now higher on all maturities than they were going into the number. Yes, if you consider Florence and the revision, it actually could be a pretty potent number. But the one thing we all really need to be quite sober about is they took the 4/10 away and made it 3/10 last month on month-over-month earnings. I'm a little disappointed by that, even though it's subtle.
Hey, Rick, just to be clear, yields are higher on maturities across the board, right?
Yes, across the board. We're 289 in twos, up a basis point, 321 in tens, up a basis point, 338 in 30s, up 2 basis points since seconds before the number was released.
Alex, what jumps out to you?
Well, I say it always makes sense to look at a bit of a rolling average, to look back a couple months. I think that the 3-month rolling average, if I'm doing the math right in my head, just went up a little bit. So we're doing a little better if we average out the quarter than we were before. I think, as others have said, weather's a play here, and then just some normal volatility. I don't think this is a bad report. I think this is a fine report.
Austan, what do we need to be thinking about? You said one-off with weather, but the trend numbers, as everybody's pointing out, still are very strong trend numbers. I go back to what you said earlier about how it was Powell's comments that you think were really pushing yields higher up earlier this month. How's the Fed react to this?
Well, look, I don't think the Fed's going to do much because I think they're going to look at this number and say, well, we can't judge. But I think going forward, what everybody should pay attention to is that if the Fed keeps raising interest rates and is able to do so, so if the 10-year keeps going up, the danger of inverting the yield curve is kind of going down. But as the interest rate goes up, let's remember that tightens the economy, and where you're going to start to see softer spots will be in some sectors that have had a really good run. So we've had a strong recovery in construction, residential housing over multiple years. We've had a strong recovery in these durable manufacturing goods over multiple years. They will be the first ones coming back and saying, oh, man, what are you doing? You're killing us. So I think let's keep an eye on that.